The effects of the tariffs imposed by Donald Trump, the president-elect of the United States for the second time, are starting to be felt. President Trump had said that the tariffs were intended to bring the American economy back to its old days and had started working on this after taking office. However, both the retaliatory actions from Canada, Mexico, and China, and the fact that additional tariffs will affect American consumers, have created a ripple effect on the stock market, causing a loss of over 100 points. The Nasdaq had its worst day since 2022, bouncing back slightly, but still leaving concerns about the stock market. The US stock market lost over $4 trillion in value following President Trump's tariffs. Canada's main stock index dropped, and while US stock markets experienced their worst day in years, the American stock market, which was already in decline last week, began the new week with further losses, leading to a $1.7 trillion drop. This marks the biggest loss in recent years. So, what will be the consequences of this decline in the American stock market? And will the American economy bounce back in the future, as President Trump suggests? The stock markets fell amid growing concerns that the US economy could be heading into recession. The Dow lost nearly 900 points. The S&P 500 dropped 2.7%, and the Nasdaq Composite fell 4%, with big tech companies like Tesla seeing significant drops in their shares. Trump has said that there will be a transition period because of the significant changes, but some investors are concerned that the administration's reckless approach to tariffs could trigger a downturn, while the jobs report signals that the labor market remains stable. Some analysts worry that job losses could increase due to the Trump administration's policies, such as deportations and government layoffs. The early week decline follows a turbulent week in the markets, driven by concerns over the unpredictable tariff policies. The S&P 500 saw its biggest drop in 6 months last week, and the yield on the 10-year US Treasury bond fell. The Wall Street Dollar Index also hit its lowest level since early November amid economic and foreign policy concerns. In Europe, stocks also fell, with the European stocks dropping by 1.3%, while Chinese stocks were affected by consumer prices falling more than expected. Various factors, such as high stock valuations, economic uncertainty from shifting trade policies, and disappointing corporate earnings, have contributed to the decline, with companies like Tesla losing over $125 billion in a single day. As investors remain uneasy, they are closely watching upcoming inflation reports, interest rate, policies, and potential government actions to stabilize the economy. The uncertainty created by tariff wars with Canada, Mexico, and Europe is causing boards and senior executives to reconsider the path forward, said Lazard CEO Peter Ozag. Technology stocks, such as Tesla, Apple, and Nvidia, were most affected, with Tesla losing $125 billion in value in a single day. The S&P 500 tech sector fell 4.3%, and Delta Airlines stock dropped 14% after halving its first quarter profit forecasts. Investors' concerns about a possible recession intensified, with President Donald Trump acknowledging the uncertainty of predicting these things due to the scale of their actions. Ross Mayfield, investment strategist at B, mentioned the Trump administration may be more accepting of the idea of market decline and even a recession to achieve broader goals. The White House countered fears of recession, with National Economics Council President Kevin Hassett emphasizing the economy's strength despite market volatility and the anticipated resolution of tariff uncertainties. Investors, however, remain skeptical, and market volatility reflects broader concerns. They are focusing on inflation reports, Federal Reserve interest rate decisions, and government measures to stabilize the economy. A further decline in investor confidence could lead to even more market downturns. Investors are also concerned about high valuations among US equities and are seeking a catalyst for a market correction. Dan Coatsworth, investment analyst at AJ Bell, advised investors to stay informed and consider diversification strategies to manage risk. Meanwhile, US-Mexico-Canada trade negotiations are starting a year ahead of schedule. US Trade Representative Jameson Greer and Canadian officials met to revisit the trade agreement Trump negotiated during his first term. Trump has said his tariff policy is motivated by issues such as illegal substances and uncontrolled immigration, but others close to the talks have suggested that his ultimate goal is to revisit the trade deal he once described as the most beneficial trade deal ever enacted into law. The US's objectives in these talks are not entirely clear, but White House officials have discussed Trump's commitment to fair trade and Canada's potential role in this effort. Trump has long criticized Mexico's state-led energy policies and China's role in the auto industry, while also taking aim at Canada's dairy protections. Ford proposed renegotiating the deal to eliminate export taxes on electricity to the US and reduce tariffs on steel and aluminum. Mexican President Claudia Sheinbaum's administration has suggested raising Mexico's tariff rates on China to align with those of the US automakers. Expect Trump to seek concessions in their favor, particularly in the current agreement's requirements for car content value from North American suppliers.